Okay, good morning, everybody. So I said I will post a video, and I'm doing it right now. Concerning the ah, okay, concerning the Euro USD. So we are still. I start with this monthly chart and this indicator, which is my indicator that I use to gauge the price momentum on the upside or on the downside. Whenever the this indicator is dynamic. I call it price 6. And when we come inside an oversold condition or overbought condition, that's what it shows. It's better than the RSI because it's much more accurate. That's why I use this one. So whenever we arrive on a monthly base on something like we had before we saw the small 200 pips bounce, then we have this indication. So that's important to keep it in mind. Whatever happens, even if we go a little bit lower on the Euro USD, we have this huge bullish sign, which is giving us a kind of momentum tank here, fuel to go on the upside for the Euro USD, and that's why I um, I keep that in mind. It's not the daily because that's another chart I can show you that I'm using. And I use a lot of multi-time frame chart like this one. You see daily, 4 hours, 1 hour, and 15 minutes. It's the same indicator on different time frame that shows us how is the price on the different time frame we are speaking about. So you see here on the daily, we remember the monthly is a strong bullish momentum. On the daily, you see we had this push after this daily bullish setup inside the big monthly I just spoke about. Then we look to have a confluence of signal in the shorter time frame, and you see that we are in the middle of nowhere on the 4 hours, on the 1 hour, and the 15 minutes. The other thing I use to get with my views is the MFI on the 7 period and on the 14 period. Same thing, daily, 4 hour, 1 hour, 15 minutes. So here, what do we see? We see that on the daily, we are nearly a top on the 7 period, as well as on the 4 hour, as well as on the 1 hour, which is telling us we will see some pullback soon. And that's what I just posted, by the way, and that's one of the reason I post that thing. If we look at it on the 15 period, which is a longer time frame period, which is double period than the 7, of course. So on the daily, we are in between everywhere. That's when we started to have the bullish signal on the prices indicator. We had everything aligned to go up, and that's what happened. On the 1 hour, we are arriving mostly on the top of the 14 period MFI, and the 15 minute, it can go up or down much faster than those one. So that confirms here on the 14 period what we saw on the 7 period, which is telling us we will need soon a pullback. I'm not saying a big one, a correction that will allow those indicators to breathe some and go a little bit lower to be able to go higher and probably much higher. But that's what we can see now. If we look at the if we look at this pricing, so you see it's a little bit tricky now because we don't have any signal confirmation on any side yet. The market is very slow, and that's what we see here is the same thing. That's what I use on the intraday period time frame. I would say that's what I use, the 5 minute and the 15 minute of the same thing with the price 6, this dynamic RSC, and those two period MFI with some other things, but that's what I use mostly. And of course, the most important is the level. You can have all those tools. If you don't know where to use them, it's absolutely useless. So here, same thing. If we look on the 5 minute, you see even the 5 minute is in the middle of nowhere, and that's normal because you see we have been struggling all since like this morning. Mostly we have been struggling all the time. We could take a long here, we had a short here, another long here. I'm still long from there. I took a small short here that I banked. So now I have some longs here I think that before the end of today, we should look a little bit higher, and we will see the level in the next chart I will use. But that's what I'm looking for now. I think we should push a little bit higher. This is pivot level here at 10270 more or less. And of course, we have some confluences in the same area with the big 61.8 fib that I already spoke a lot about, and which is one of the guideline we are using. So if we look at, let's take this chart, even if we don't need what we have here, I will just hide those things. So that's a weekly, daily chart, whatever we want to take, just a bigger time frame. So if we take this blank chart, what do we see here? We had this bottom there, which was right on a one-to-one extension of an ABC down. And we are now struggling on the big fib, which is, which is the all-time fib, what I call the all-time fib of the Euro USD. So you take fib retracement, in that case, not an ABC. So we are right there. And this is, sorry, the all-time fib is where we bounce from. You see here the 76, 78.6 fib. That's where we are bouncing from, together with that ABC down one-to-one extension. And we are now struggling on the 61.8, which is this one. I copy it and paste it here. Okay, so it's this 61.8, which is very important because it's a weekly ABC, and that's weekly ABC is telling us, is for now, sorry, stopping us on the upside. So you see, it's that ABC, very important one, ABC. We have been respecting it very nicely till now. We stopped mostly to the pip on a one-to-one extension, which is very good because that is validating it again. You see, we stopped there again on the 78.6 on Friday to the pip again. So it's giving us a lot of information about the validity of this ABC. That's where we are now. And we need to break that 61.8. That's the one I'm speaking about since a few days at 102.70. We need to break that on the upside. When we will break it on the upside, we will look at a move that will probably look, something like that. I take the brush. We will have, when we will be able to break something like that, come back on the 61.8 and then look for the 50% fib. From there, you see the 50% is at the same time a very important break point, a void that we didn't fill yet. This area has been trading on the daily base only one side, so we need to trade that area back on the upside. And then when we will come in this area that I will highlight now in green, so when we will come back in this area, from there we will see a lot of sellers that will come back to sell this back, and we will have a nice short entry there. I already spoke about it last week and the week before, so that's a normal price action thing. We are in the middle of the summer now, so thin market. I think this week we still have some action because many are waiting for the last FOMC of the summer. But then after the first week of August, I will even myself be a little bit out of screen because it's a little bit a mess. I will just stay a few hours and then leave and do something else. So that's what I'm looking for to happen. I would like that to happen before, after we get first a pullback. So due to what I just explained concerning the momentum and volume indicator, I think we need a pullback from there very soon. It can be right here. And for that, we can look at this chart that you all know. So it's the chart I'm posting all the time. This one is a little bit crowded because that's my real-time work chart. So you have here the 2021 daily moving average, exponential moving average that has been holding the price since the 19th of July. You see how many times you see that the 61.8 we just show we just saw on the previous chart is holding the price together with that ABC down, but that has been updated when we had this spike up. Then the very important level we will need to look at beside that ABC down, which is there, and the 50%, which is here. I just spoke, we need to go there, touch that one, then come back either till the 61.8 or inside level and then bounce from it to see more upside. So very important is this retracement. I put it on my chart now with the name and everything, so you can take some screenshot or whatever if you want. You have the level of those things on the side, and you can see I put retracement, and here it's ABC weekly, which I just show you. So this one is a retracement, is an important retracement we have there. And we have here the 2140 and the 2360 retracement. And this one, if we look at it on a long-term chart, this one is taking that swing down from here. On the big swing we had, you have this top here, so I take it from there to the bottom. That's what I'm using there, and I will probably update some chart. In that case, I will post it to you, of course, when I will do so. So we need to look, as I said, right now I'm looking for some little bit of upside break. We could not really go lower this morning, and even with the New York Open, it's right now 4 o'clock, so it means half an hour after New York Open, and the bears could not drop again the Euro USD. Usually when you have several try like this one, staying nearby it without pulling back very strongly, we generally see a break of that 61.8 fib together with the daily moving average. So what we can see here, the other important thing here, we had this consolidation. We came back to find some momentum inside the 78.6 sister fib of the 61.8. We bounced from it, and now we are again struggling in the area of this one. So that's why I'm pretty sure we'll break now up. Pretty sure. I'm confident that we have chance to see a break higher, and then we will stop somewhere, of course, on the way up, and we can look for some confluence on the way up. So I will add that if you like. Let me take this one, copy it, and then we go back to this chart, which is a little bit less crowded. So it's a little bit cleaner. So you see where we are. This is a daily 2021 EMA. We are struggling. We are just right now trying to go through that. Okay. So we have this one going on now, 61.8, which is the one I just said, and which is the most important thing. Then when we look for something to hold the price, so I took this intermediary ABC here. We could to take this one, for example. Let me magnet that. So we can take this one here to this bottom there, which is this time it would be an ABC retracement and not fib retracement, sorry, and not an ABC extension. So if we look here, we see that at the same time that we have this 61.8 just before we had this 1140 fib. But when I was speaking about the 50%, if we would break up, then we have here a very important confluence together with the 21, 23, 60 and 38 to fib of that ABC down. That's something we need to keep on our chart, because we know then that this 38 will have a strong reaction to, like the 50% here. So that's one point. I can highlight that if we want to have some information, you can just highlight those level here and put some text like 2140, 2360, retracement, and then you have it on your chart, you know where it is, and you know why there is a confluence in that area, center inside. Okay, so we have it there. Let me double check if it's okay. Well, it's okay, it's there. So you have this one there. You need to put it very, very carefully because this one is not well done enough. But you know you have something there, and you will look at it when that happens. The other fib we can look at, because we have this M top here, is the second one there. And in that case, we have it a little bit lower. So that's something we will need to keep in mind, because we can have two different reaction with a little bit of difference here. So this one, same thing, same text. We just change, for example, a little bit the color. And we know that in that area, we will have exactly the same thing. So we lock this one, and then we can take rid of that retracement fib. Then if we look on the all-time fib, we do the same here. You take this one, you take that one there, okay? Okay, we take this bottom here, okay? So that's what I'm doing right now. We always do it mostly. So you see this one is too big one. We don't have a lot of things to see there. We should stay then on a smaller time frame. We can take these lows here, which is the actual low, and we look for some other confluence of fib, for example, that could be interesting to keep on the chart, because it could be reactive. Do we trust this fib, for example? Yes, we do. Why? Because you see the reaction on the 61.8 here, very nice reaction. You see the reaction here on the 50%, still valid. The very good reaction there on the 38.2, when we had a bounce there before we saw this drop on the Euro USD, if you remember that. So we had this big drop. So you see this one is really interesting to keep in mind. Then when you have validated your fib, look how perfectly it was there and really here. That's really nice. When we have validated that, then we know we have something that could be very interesting, and we want to keep track on that one. So if we want to keep track on this one, let me make sure the low is okay. So you take the lows, you go in coordinates, you have here the low, the height, and everything we need to have. So we look at the low of this candle. The low is 0.99521, 0.92951. So we put it to the pip to have really a very precise fib. Here it should be okay because we did it with the magnet, but it's always good to double check to avoid. So it should be 139,938. So we look here on the top, 139,938. So that's perfect. So we can lock this one. We lock it. We go back here. And now we have there something we need to keep in mind. And I will do it live with you, because that's something we will use for the bounce that we could get and that we expect we can get. Sorry, I was trading at the same time. So we have this this fib here, this 1140. Sorry. So yes, we have this 1140 fib just above the 50% that I say. Under it, we have nothing. So it's not helpful now, because now we are in this area here. Okay. So this one is the 1140 retracement. And we will keep it like this in blue, and that's done. So now, if we take up this one, and we have here our big thing, I would say, roadmap. So you think we have this 1150, a little bit above the 50%. So which makes we can take this one, and then we would have a very important area in this area with the 2140, 2360 fib, depending how we put it, but that's a very, very important area. This level will be important, this one too. And either we use the 38.2 ABC here together with the 2360 fib. If we go there, and I think that with what we should see, then we know this yellow is the right one. If we stop here, we know it's the other one that the market is using at this point of time. So that's kind of, let's say, longer term view on what we can use. The other thing you can use here, of course, is the retracement of the swing. If we use the retracement of this swing, here we have the ABC, but then we put the retracement of this thing, and what you see, of course, is we have exactly the same fib than we have on the ABC, because that's how the ABC extension is calculating, taking this one as a one-to-one extension. We have this one, which is the one-to-one extension, so that's normal. You have exactly the same thing than we had inside the ABC, with some more like this 8860 fib. So when we would come there, that's the trend continuation or reversal in this area, but we would need first to break all that, so that will not happen right now, of course. Concerning the FOMC, well, we have some very important support here that could be used during the FOMC, of course. So those one have to be on the chart, because we have used them so many times, and we will use them again inside the FOMC within 2 days. Then we can look for some inside ABCs. For example, there, what we can do, if we think, okay, we have some possible continuation after breaking this area. So you take the daily, for example, which is not the best in that case. The 4 hours, I don't like. We have this in the middle. Even if we go with the weekly, it's not good. So potentially would be this 4-hour thing here, with the struggling there, which is not really nice. So we should take an ABC like this and check. What I'm showing here is how you need to check and not make your mind before knowing if a fib is valid or not. We need to see in a fib a validation from itself. Like here, what do we see if we take this ABC? So we see we went to the 61.8, which is together with this big 61.8. I already spoke about that side intraday when we come to this area. That's why it's hard to break this one, because we have this weekly ABC, this inside 4 hours ABC, and both 61.8. That can be the end of this move up. Could be. But we remember the beginning of this video, we have there a very strong monthly bullish setup. Okay, so we have some fuel there. So I think we will go higher before, if we ever touch this low now, but I think we will go higher first. We can come back to this area. We can come back even one day to double bottom in that area. That's possible, but I don't think that for now we will break this level. I think we will go first on the upside. What is very interesting with that ABC I just show you right now, I will put it better on the C here. The B is magnetic, so it's already perfect. And this one is okay. Same thing. We look here. We have the lows at 101, 193. We check this 11019, 191. Okay, so we put it to 93, and now it's perfect. Now we lock it, and what do we see is, look at this 50%, which is important. I said, and I explain why. It's a weekly ABC down. At the same time is a confluence of the one-to-one extension of that ABC up. So it's very important, because we know that in this area we will have a pullback when we will get there. What do we need there? Same thing with the 61.8. We need to break that 61.8 here to see some follow through first to those 286, 264, 786, 764. We will come back probably in here, or perhaps not all the way. Then we will go to the one-to-one, which is the 50% of the weekly, and come back somewhere inside there. Then if we want to have a little bit more view on what is happening with the regular candle, you take the regular Japanese candle there, you have the 50%, the 61.8, you see what stop on it quite nicely. You see here the 236 has been used and see what happened this morning when we had the pullback. You saw this move this morning, this early morning, we had this weird move. We went down and then up again when we had some bad German IFO data. And you see where we stopped, right to the 236. That's why I went long, and I think I posted it. I'm sure I posted it in the tweet. So all that is giving us some important information. Let me move that thing like that to be perfect. So all that is giving us information about where we can expect a move to happen. What we have had, if you look a little bit more inside and zoom in, you see we are now opening and closing above the 50%, which is the first time we had one open close candle complete there. It never happened since we have this one. So it could be we find a little bit of support in this area, and we could perhaps go up there. I think first we will see a retracement, as I said, for the reason I explained earlier with the volume indicator, with the price action indicator. But if we don't see a retracement now, we would first go to this 61.8 red and black fib here that has been holding the price perfectly so many times. And we will find some resistance there. Now, let me come back to where we are right now while I'm speaking. Nothing has changed here. The 14 period and the 7 period is doing nothing on the 5 minute. So in those cases, you need to refer to the previous signal you had when there was some real price action, which is not the case there. So you see nothing is happening. We expect to see a push on those pivot, which is at the same time the same area we have here. If you look well, 10270, 10274 is exactly the same that we have here with the pivot. So you have here 10270, which is exactly the same. We can overshoot that a little bit. Of course, those levels are much more accurate than any pivot or whatever you use. So that's what I think we will see inside the FOMC. If we go first on the upside, that would be good. Sorry, that would be good now to go on the upside, then pull back from it before the FOMC and be able to buy back some Euro USD, ideally here even a little bit lower. I think as I wrote this morning on the FOMC document I posted, I think we could have a surprise on the FOMC on Wednesday, and we could very well pull back. Drop a little bit on the USD because of what I explained about the rate hikes, the inflation that is not really caring, doesn't care anything about all the hikes that has been done by the Fed till now. You see the US have mostly the same inflation rate than other countries, even like Europe, that didn't hike anything before. 1 second. So we could expect market to be disappointed either because they would not hike 75 points due to the fact that it's really slowing the economy and they cannot afford the economy to be slowed down too much. So we need to keep that in mind. The FOMC can, of course, go much lower if we have a very big surprise with a very big hike. If they do it, that would really not be very reasonable, I think, but they can do it. But I think that due to the fact we have many indicators starting to show some red lights about the growth of the GDP growth inside the year, I think we could have some hawkish, some dovish statement after the rate hikes from Powell, due to all what I already explained about the growth and the problem of the rate hikes on the growth. So there is no secret thing to slow the inflation, and the rate hikes never did it in a blink. It's a long-term process. Meanwhile, people see the price going up, they stop purchasing, they stop investing, they stop buying TVs, radio, cars, everything. And when we know that US GDP is done of 70% with the consumer spending, then you imagine what can be the results on the economy when 70% of the GDP is reducing fast. And that's exactly what we had. So on the upside, we spoke about the level. On the downside, we had those level, and sorry, and we have, of course, some other level, but I post those one on the in the Twitter feed. So if we take this one, this consolidation, if this bottom left and is not taken anytime, then you have the one-to-one extension right there on the 50% of that ABC. That would be great. I will update anyway a little bit more before the FOMC.